This is a critical point that I'm telling you. If we break below this, you're probably the next the next support lies somewhere. Silver's at a pivotal point right now. This week will tell us everything. Let's dive in. But before we get started, standard disclaimer, guys, nothing in this video is financial advice. I'm not a financial advisor, so please do your own due diligence. Okay, so let's kick things off by looking at the weekly close for gold. Gold, when you zoom all the way out, I mean, you can clearly see this thing has broken out. Boom, right there. But how did we do for the week? We've been broken out for quite a while. For the week, however, we do see a bullish engulfing. Boom, there it is. Your green candlestick overwhelms your red candlestick from the prior week. Now you do have longer wicks here, but nonetheless, the candlestick bodies are eclipsed. The one from the week prior is eclipsed by the current one. So that's a bullish sign. That's telling us that the probabilities are higher for gold to keep on moving up. And what does our time series model say? We'll pull that up really quick. And it says that the uptrend is strengthening, which is what our candlesticks portend. So it's not just enough, guys, to look at lines and trend lines and all of these sort of things. You've also got to be able to read the candlesticks, because the candlesticks tell you everything. The candlesticks are a representation of herd mentality. For example, this bullish engulfing essentially tells you that this week we opened the price down we opened the price down lower than the way we closed it from the prior week, but despite that, we managed to close higher than the prior week. So that means that the buyers have overwhelmed the sellers in this case. When the buyers overwhelm the sellers, of course, that is bullish. Let's go ahead and look at the gold to money supply ratio. And the reason why I pulled this up, you'll see here in a second, is that gold is sitting on important resistance. So it's important that we look at gold and all of these other assets, not just priced in dollars, which is a moving target. But the question you should always be asking yourself is compared to what? When something is priced at a certain value, compared to what else? So let's control for the amount of money sloshing around in the system. So we've got the gold price here in the numerator, and then we've got the money supply in the denominator. So as the money supply goes up, that tells you how valuable gold is. So when you zoom all the way out, this is on a weekly candlestick view, you'll notice that gold is sitting at critical resistance. This resistance line stretches all the way back to, at the very least, 1993. Now you can make the case that you could extend it all the way here, all the way back to here, right? And you draw these trend lines wherever you see buying and selling to a high degree, high volumes of buying and selling. So there's a critical point here in 1990 where we reached the same level, as well as here throughout the 90s, 93 all the way out into 96. And now we're back to that same ratio. So the price of gold relative to the money supply is about the same as to where it was in the 90s. And that was a resistance. That was resistance back then. Now later on down the line, we managed to break that in '08. But nonetheless, once we break through that, another point to look at, I'd probably say lays around. There's probably a minor one here as well, but it's not as strong. It's not as obvious as what you see here. But definitely this level here, which is about, so if you're indexed at 58 today, and let's go ahead and do a little math. Okay, so 91 is high. So you're about a 60% move up or so. So let's see. Well, so if you're indexed at 58 today, the value of the next resistance line is 90. Okay, so if I do a little quick math, I think that's a 60 to 70% move in the gold price. So if you're sitting at 2,300 today or just about, You can expect the next resistance to lie somewhere in the lower $3,000 range. So we've got to break through from this resistance. It looks like we broke through it momentarily for a brief moment in time, and we've just been testing it. We've hit our heads on it multiple times. So another thing to keep an eye on. All right, let's move over to silver. This is what I was alluding to, guys. You've got this expanding megaphone pattern to the upside. Now we are at critical. This is the critical point that I'm telling you. If we break below this, you're probably the next support lies somewhere in this $26 range, I'd say. So let's look at this from a log scale. And yeah, so you've got a lot of buying and selling happening in this range here. So this 25 upper $25 range. If we break below this $28 range, that's probably your next stop. If not, then we just continue moving upward in this ascending megaphone pattern. So this week is going to be critical. This is on a weekly candlestick. Let's go and look at a daily candlestick. And boom, this is where we're sitting. See, it's clear as day. So the good news is on Friday, we did touch it and we bounced right off of it. So that's good news. So we finished off the week strong in that regard. And so when you look at this from a weekly standpoint, our AI model says the uptrend is strengthening. It's a moderate uptrend, but it's strengthening. So that's good news. So it's telling us what we see in the TA, in the technical analysis. Okay? And similarly, when you compare the silver price to the actual M2 money supply price, you're not quite at that resistance line, that same resistance line that you saw with the gold price, but you're pretty dang close, I'd say. You're almost there. There's a resistance right up here. I think if you convert it to whatever the current silver price is, you're looking for, if you're indexed at 65 today, you're looking at a resistance at 76. So that's about a 20% move up in the silver price. Okay, so that's your, I want to say, $35 level. That's probably your next resistance there. Especially because, look, I mean, you have a lot of buying and selling occurring right here. Again, 93 to 99. A lot of buying and selling happening in this area. And you could also make the case that it also occurred here back in the 70s as well. It's in that same zone. So there's historical precedence to it. And I know what you guys are going to say. When you zoom all the way out, actually, let's go back to a linear scale. But when you zoom all the way out, you're indexed at 43 right now, relative to the money supply. At the peak of the 80s bull market in silver, you're indexed at 863. So you can do the math. That's about a 20x from today's silver price. So let's do a little rough math. $30. I know it's $28, but just for the sake of arithmetic and simplicity, let's say $30 times 20. That's $600 silver, just about. Am I saying it's going to get back to that level? I'm not sticking my neck out that far, but I will say there is a lot of runway ahead of us. Even if you retrace a fraction of that ratio, you're still looking at a significant price move in the price of silver. All right, the silver to gold ratio. So the reason why this ratio is always important to look at, guys, is because when silver outperforms gold, that's a telltale sign that you are in a precious metals bull market. And so it's also good for gold as well. So this is the weekly view of things. And you can clearly tell we broke out of this short-term resistance that we had going on since the peak of 2021. We broke out of it, but we've had a number of bad weeks. 1, 2, 3, 4. Four bad weeks in the silver to gold ratio, meaning that gold has outperformed silver now for almost a month. And it's no good. We want silver to outperform gold because it's also better for gold. It means speculative money is flowing into silver. is confident enough to flow into silver, which means that it's a precious metals bull market. But let's zoom out a bit. We looked at this the other week as well, but you have this long-term resistance line building up here, and you are right on the cusp right now. Well, you were at least. You hit your head on this resistance line back a few weeks ago, back in May of this year, and it's just been correcting. It's just been correcting. So we may have gone a little ahead of ourselves with the silver price relative to gold, the precious metals bull market at large. But these things don't go up in a straight line. Okay. I want to pivot over to energy. I think energy is showing a lot of potential at the moment. There's a lot of good opportunities in energy, especially in regards to natural gas. Natural gas is currently priced at $2.81, and zoom out here. Let's pull this out here a bit. As you can tell, from the grand scheme of things, $2.81. You've had highs all the way up to $16, and we've broken out of this. We've broken out of this resistance, and no one's talking about it. August of 2022, you had the spike in nat gas prices at the start of the war there, and it's just been a descending move down. But you've had 1, 2, 3, 4, 5 consecutive weeks of nat gas moving to the upside here. So nat gas looks actually pretty good. I also want to shift your attention to coal. If you haven't seen my interview with Lobo Tigre from this past week, he mentions how he's very bullish on coal. He sees that as his most asymmetric, as the most asymmetric asset at the moment in regards to resource investing. And the reason why that is you know what? Let's go ahead and pull it up here. Okay, so there you go, guys. Coal has been squeezing. It's in this descending wedge pattern, and we broke out of it. Game on. So, this, of course, coal and nat gas's move up is predicated on or more specifically nat gas. If you go back to nat gas, this is more predicated on a cold winter this coming season. And that's all it's going to take. If we get a cold winter, we've had warm winters for the past 2 years, and that's very abnormal. That is an anomaly. Are we going to have a third? Is the third time the charm? We'll see. But if we have a bad winter, it is game on for this thing. It's at $2.81 now. It was at $10 a couple years back. And let's go ahead and look at sentiment really quick. Sentiment is slightly moving up higher in regards to nat gas. Another interesting thing about nat gas and coal is that they seem to kind of follow each other if you look at it from here, right? So you both have this big hump, and more specifically to nat gas. It's coal. I think coal looks even better too. I mean, it's just a lot cleaner in its breakout, and it's not as dependent on colder weather as, say, nat gas is. All of these AI data centers that you're gonna have to build up, you're gonna have to get that energy somewhere. It's not gonna come from wind and solar and etc. I think even the CEO of BlackRock said that the other day. So, yes, things to look out for. I think if you want to be a true contrarian right now, look at nat gas and coal. Gold and silver have already seen their big move up, but I think nat gas and coal are things to keep an eye on. At least have some exposure. I mean, not financial advice. I have exposure to nat gas and coal, but that's what I would do. I would just do a little due diligence on those two. Price of oil. Okay, so oil is also at an interesting spot. You do have this resistance line. It's been building since 2022, but it looks like it's lagging behind the nat gas and coal trade. Both nat gas and coal have already broken out of this similar pattern here, but oil has not followed suit. Oil has not followed suit. What does the model tell us? Pull up our AI model. It says that there's no trend, right? No trend and no trend. Downtrend is actually forming. So The model is actually slightly bearish on oil. And I think the reason behind that, guys, is just simply because oil is a very politicized asset. You can pull this stuff from the strategic reserve. You've got an election coming up. They're going to want to keep the oil price down. I don't think the coal and nat gas price are as high priority to manipulate to the downside as oil is. But that's just the way it is. That's just the way it is. But the cool thing about a free market is the longer you distort it, the consequences on the other side are going to come back magnified. So you're going to keep the oil price artificially down while ceasing production of it. Well, that's just going to create it's going to provide more stress on the supply side. And if that happens, once that happens, the price just goes ballistic because you've artificially kept it down. So it's only a matter of time, I think. Oil is probably a little bearish. Let's actually run the model on coal as well. I was meaning to do that. Sorry about that, guys. And then, so yeah, coal, the model says no trend. So it doesn't have enough data for a trend. And then nat gas, let's see what the model says here. This is actually my first time running it on these two assets. So we'll see what it says. Okay, so coal, nat gas, no trend, but an uptrend is forming. So we're in the early stages of an uptrend. So that's what our AI model says. Interesting. So it's, okay, so according to the AI model, it probably goes nat gas, coal, and then oil, if you were to look into the energy space. And of course, uranium. Let's look at uranium. I don't want to upset any of my yellow metal followers. So let's look at uranium. Uranium usually does this. I mean, you zoom all the way back up here, guys. You do have the consolidation periods over about a year or so. You saw that happen. You saw that happen back here in April 2022. You were consolidating for what, from April of 2022 all the way out until May of 2023 last year. You broke out of it. You resumed higher from the $50 range, and you shot all the way up to the $100 range. And you're kind of doing the same thing now with uranium. So let's see, just draw a little line here. And yeah, uranium just needs time. It's correcting. It had a big move to the upside, but uranium needs time. What does the model say? The model says that the uptrend is weakening, but we are in a moderate uptrend nonetheless. So I think uranium will resume its move up, but it probably won't happen in the near term at least. Probably the midterm. Probably towards the end of the year, I'd say. So that's what I got, guys. If you enjoyed this content, be sure to give us a like, comment down below. Also, be sure to check out Capitalist Exploits. These guys are who got me into the energy space as well as the mining space. I've got a link to their newsletter down below, and we've also managed to get you guys a $1,000 discount on their newsletter. They're my favorite newsletter, just so you know. So I did manage to get you guys a special $1,000 discount. You're not going to find it anywhere else. Check them out. Just click on the link down below. See what they got to offer. Yeah. I mean, these guys were very early on the energy and mining trade. I got into it in 2020, but they were actually, I think they're positioned well at 2019. So before you had a lot of Johnny-come-latelys like myself come on the scene. So be sure to check them out. Subscribe to the channel if you haven't already. Let's get those subs up. Come on, guys. Get those subs up. A ton of you guys, 85% of you guys who are watching this channel are not sub. What's up with that? If you can't, donate money through the Buy Me a Coffee or support me through the affiliate links down below, at least give me a like or a sub or something. So, all right. I will see you in the next episode. Bye, y'all.